Hey traders, how's it going? Dale here doing a trade demonstration video for my website, theforexguy.com. Today, I'm actually looking to go long on the Dow Jones due to some technical reasons here. The Dow and the S&P, they're in the middle of their Trump rally right now, so they're very bullish markets. Before I continue, I just left my trade management panel on the screen here. I used this to set the trade up quickly. So I've already set up the trade. I don't know if I've shown you this before, but this is my new version of the trade panel. Like it calculates the risk for you. So you put in the dollar size amount that you want, and it will auto calculate the lot size and basically does most of the work for you. You've got a few different a few different entry options there, stop loss options. We've got trailing stops, OCO orders, and straddle trade configurations, different risk reward setups. So it's a Swiss Army knife for traders who use MT4 and really makes things easy. So if you're interested in this, I've got a video series on it demonstrating what it's capable of. So I can close this down now. All right, going long here on the Dow Jones. Why? Well, here on the daily chart, get into focus here. This line here, right here, is the previous market ceiling, the all-time highs of this market. So for a while here, we've been bumping into it, and really the market hasn't been able to move much higher than that. That was the market top for a few months there. Now we've recently broken through into all-time highs up here. So that's a pretty big deal for the stock indices or the US stock indices, or any really, breaking into all-time highs, because overall these stock markets are bullish markets, right? Sure, they go through their boom and bust cycles, but for the most part, they like to be bullish markets. So when they break into higher highs, that's usually a huge bullish flag there. So we break into higher highs, okay, so that's a big bullish indicator. And then we correct back into that old market ceiling, which we are looking for it to hold as support now. And when the market uses the old market ceiling or an old resistance level and uses it as new support, that's a sign of strength. Okay, so that's helping us confirm that this isn't just a peak out to the highs here, a bit of a bull trap, and then it's going to fake out kind of thing. Actually pulling back and then picking up strength again off that old support. So that's what we want to see. We can see that here it's created a local swing level. So we can see those previous swing highs, we've come back and tested them, and we can see that it's using it as higher lows here as previous swing resistance, now support kind of thing. So that's nice to see as well. What really works with these stock indices is basically breakout trades. These are breakout driven markets. When these stock indices break previous highs and lows and things like that, that's usually a catalyst to really get the breakout going. So right now we're in the middle of the US session. Okay, and I've placed my breakout order now. Generally with these stock indices, well, the S&P and the Dow and probably the Nasdaqs as well, you definitely want to wait till the US session before you start making any breakout decisions. These are active markets during the US session, right? We don't really want to make breakout decisions during the Asia session, and not even really in the London session as well. If you watch these charts, you'll notice that if they do break out in those earlier sessions, those breakouts don't really have any backing behind them, and they tend to fake out. The real money in these markets is when the US session is open. That's when all the stock markets are open for the US, and that's when the money gets behind it and can actually push a breakout. So in the US session, if we see these breakouts occur, that's when we want to get involved with it. That's obviously for the US stock indices. Okay, because they're US markets. Obviously, if you're trading other stock indices from Europe or the FTSE or something like that, then you would localize those events to the session they're active. So what I've basically done is I got a notification from my battle station telling me there was a breakout trap and reverse event about to happen, and that basically means that the market broke the previous lows earlier, and then it's rallied back up, and it's about to break the previous candle highs. Okay, that's the breakout trap reverse trade. It's a fake out on one end, and then a breakout on the other end. I've really been planning to go long on this market here because of that breakout into a higher high event. So I've basically been waiting for some sort of bullish cue, and if we can break the highs this session here, I'm definitely keen to get long there. So if that market breaks into higher highs here again, that's going to be a very good signal. But I've placed a buy stop here. Well, I use my panel to do it, and we're just waiting for the market to break those previous candle highs to trigger us in. If it doesn't, then I'll probably cancel my order and wait for next session. Look on the weekly chart. So the weekly chart really just shows us that break into all-time highs last week. We're looking, if we have a look a bit closer, we can see the previous week is bullish, so we're looking for continuation there. So definitely if we break that previous week high as well, that's going to be a good bullish signal. I've just set my target to 1 to 4. I could probably extend that a bit higher, but not sure how high this market will push up just yet. I think I'll just play it safe and go for 1 to 4. 1 to 6, maybe even 1 to 8 is probably not too unrealistic. As you can see, when this market does break out, it does get moving quite a bit. So just going for a nice little bread and butter kind of trade here. Let's take a look on the 4-hour. Now we can see on the 4-hour, we got that nice rejection there too. Okay, so the previous candle there on the 4-hour chart does show that rejection of that previous market ceiling, and it does point things into higher prices here. We could even possibly be a bit sneaky and try and catch a pullback into that rejection candle. I think I'll leave my buy stop there. I'm pretty happy with this trade setup. So, but we could be a little bit more aggressive and potentially use this candle here. Oh, that's an arrow. And start looking for pullback entries here and try and catch a bounce there. But the breakout, that's pretty much going to guarantee to get you into the trade. If you use a buy stop order, when the market does break out, you're guaranteed to get in. Whereas the pullback entry, market always doesn't pull back and hit your entry, which can be frustrating. So that's the trade idea on the Dow. We'll leave that, and yeah, we'll come back and see how it all unfolded. Well, hello traders, it's Dale back here to conclude this trade. So here we are now. The trade is still open, but my intentions are to close it. You can see the configuration is a little different than when I left it in the previous video. I did extend my target, as I did mention in the other video. The potential for much higher targets was there, and I thought I would ride this out and see if I could take advantage of the breakout and the trend that was developing. Now, I'm going to have to close this trade now. It's actually frustrating me a little bit because what's actually happened is the market's really destabilized here. The trending structure is just not existing anymore. We've actually got a lot of whipsaw-y kind of volatility happening at the moment, and we've actually got what you would call a megaphone pattern, where you would get expanding price action like that. So the swings up and down get wider as the market moves on in time. It's kind of like a very volatile sideways market, and that's unfortunate. But luckily, the market has retraced back up to these highs here, which I really think is a sensible idea now to just exit the trade here and get out of this mess while we can. If the market remained in a nice trending structure with the high highs and higher lows, then we could ride this out comfortably. We actually had an outside candle here, which was a nice bullish signal, nice textbook trend trade. But basically beyond that, from here on to the right here, we've basically just got really nasty whipsaw kind of price action, and the structure here is just gone. So if I go to the 4-hour chart, we can see that megaphone kind of more elaborated there. And this just doesn't look like it's a nice market to be in anymore. We've actually got a large 4-hour rejection candle, which was the last 4-hour candle. So that is also screaming that lower prices is likely to occur from here. So I think it's time, while we're at these highs, to get out, take profit, and just call it a day. All right, so closing the trade, and she's gone. So the other point I wanted to make with this trade that was really a cancer that was starting to get out of control was the swap rate here. All right, so the swap rate, it can be positive or negative depending on the interest rate deviation between the two currencies that you're trading. But here we're only trading the US dollar against a contract of difference, right? But we're still using US dollars, so we have to pay the US dollar interest rate, which has been on the rise at this stage. So we've got to pay interest rate on that US dollar, and those swap fees were just creeping up slowly and really starting to dig into my profits. So the market was going sideways, the swap rate was coming up and chewing into my profit. So I managed to get out at a risk reward of 1 to 4, which was my initial target. So very happy to remove myself from the trade now. But the swap rate has basically made that a 1 to 3.5 risk reward there. I really like to ride these trends out when I can. If you guys know me, you know I'm very patient with these trends, and I will ride out the moves. But when the market just says no, I'm a trade what you see kind of guy, not what I think. I still think this market is going to go up. I still think that the potential for high prices is there. But right now, this very harsh sideways megaphone kind of structure is not something I really want to be in. I'm not far enough into the trade to basically hold through this kind of consolidation. I've only just really reached the first stretch into higher highs. I will continue to look for buy signals here. I mean, the although we have a bit of destabilization here, we still have the market essentially printing higher highs and high lows. So the potential is still there. But like I said, I'm going back to what I was saying with the I'm a trade what you see kind of person, not what I think. I think the market's going to go up, but what I'm seeing here is a disaster at the moment. So I have to get out of the trade. So this is my Dow price action trade basically concluded. I think I've said everything I needed to say. If you're interested in learning about price action trading, I'm a price action trader that bases my trades on a swing trading and breakout trading methodology. I'm not interested in day trading or scalping. So if you're interested in the swing trading and breakout trading aspects on the more higher time frames, and that means from the 4 hour above, then you can check out my website www.theforexguy.com. I've got lots of information there. There's other videos as well. I've got other videos on the YouTube channel for you to check out just to give you an idea on how I trade. And there's plenty of food for thought knowledge in those videos as well, for you to absorb and apply to the markets pretty much immediately. So, yeah, that's it. Walking away with a profit here. Very happy. So, thanks very much for watching and sticking around. I hope you enjoyed the video and got something from it, and I'll see you guys in the next video.